Computer-based trading, or even high-frequency trading, is responsible for something like 70 or 80% of activity on the world stock markets. But it's controversial. Think back to the flash crash, which happened on the day of the last UK general election. Professor Richard Payne has been commissioned by the UK government to do some research into this and to take a look, find out whether it's a good thing. Professor Payne, is high-frequency trading, computer trading, good for us?
The collected academic evidence at this point in time suggests that if you look at simple metrics of market quality, how cheap it is to trade, how easily you can trade, then the increase in computer-based trading has been associated with an improvement in market quality. It's got cheaper to trade, it's got easier to trade, and people believe that prices have got more efficient in the sense that it's easier for information to get into prices. So the existing evidence on those kind of simple metrics suggests that computer-based trading is a good thing. It makes cheaper, easier, quicker, better to trade. However, that's one question you might ask about computer-based trading. The other question you might ask is has it increased the probability? You mentioned the flash crash. Has it increased the probability that we see very wild swings in prices, but only occasionally? The statement about spreads and the statement about trading costs was a statement about averages. If the average trading cost comes down, but every once in a while we see completely crazy trading conditions, that could be interpreted as a really rather damaging outcome. And the evidence on that is less clear because these episodes, such as the flash crash, are much less frequent and much less easy to analyse.
So what are the trends? Where's this going? What's computer trading going to look like in 5 or 10 years?
I think that's a tough question. I mean, in some sense, that's the question that the UK government were interested in answering when they set up the project that they did set up with the Department for Business Information and Skills. What can we expect 5, 10 years out to happen to markets, and thus how should we be thinking about how we might regulate markets now in order to make them better in the future? Again, I think the worry here is not that computers do the majority of trading. I mean, even if you and I, or the pension fund of you and I decides to trade some shares, they're going to be doing that with a computer. So it's not that computers are doing all the trading, it's does the proliferation of high-frequency trading, of hedge funds who have strategies which seek to try and exploit minuscule differences in prices over milliseconds. Is the proliferation of that type of strategy, is that going to cause damage to market quality? Perhaps, again, not in terms of average cost, but perhaps in terms of periodic illiquidity, such as the flash crash. So I think it's tough to say where we're going categorically, but it's pretty easy to say that there have been some concerning episodes over the last 3 or 4 or 5 years which make us think that there may be something worth regulating there.
But the danger is whenever new regulation is proposed, the fear will be that it'll be a sledgehammer to crack a nut and that an awful lot of damage will be done to something that is essentially good. No,
absolutely. I mean, if we go back to what we were saying before, it would appear to be the case, and I don't think the evidence is categorical on this, but it's fairly one way. It would appear to be the case that high-frequency trading and computer-based trading has been associated with better markets. So if you're going to try and regulate the nasty high-frequency traders out of the market, you may at the same time be regulating those guys who are bringing the good things to markets, right? You're going to be regulating those people out of the market, and maybe trading costs will get worse. So I think your analogy is correct. I mean, we have to be very careful about the type of regulation that we use to control these guys.
So your message to the UK government is think very carefully before you act here.
Think very carefully. There are a range of policies open to you, and we don't want to throw the baby out with the bathwater. We'd like to retain the ability of people to use computers to trade stock efficiently, but we'd also like to limit the scope for people to unscrupulously manipulate markets, if such people exist.
Professor Richard Payne, thank you very much.
Thank you very much.